There's a war going on right now in the Middle East, and Israel is threatening to take out Iran's oil production facilities. The current administration, our current administration, is against oil fracking and oil production in the US basically for the last 4 years. Oil prices are actually pretty low right now considering these circumstances. Stay tuned to the end of this video and learn exactly how I'm going to profit using options in oil over the next few months. Hey guys, Darren here. We've got a great video for you here today. However, if you appreciate the time and effort that goes into making these videos, please hit that like and subscribe button down below. It really helps out the channel and I appreciate it, so thank you very much. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. There's also a paid course as well. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's take a look at Chevron. This is a ticker symbol CVX, and you can see right here, Chevron Corporation is trading at 150 right now. This is a 5-year chart, so you can see it's been pretty flat since, wow, 2022. But the thing that's nice about Chevron, take a look at this. The 52-week range is 170 up to 170, so that's over the last year. We're at 150 right now. The estimated target, that this is Yahoo Finance, they've got 169, so basically back up to 170. And look at this forward dividend. There's a 4.33% dividend, and you're going to see here I've got an article that's going to show you why they're going to continue to make their dividend going forward. And if we look at the PE ratio, it's under 15. That's a value stock. So a value stock that pays a dividend. You know, there is talk of a possible recession with the bonds where they are, with the Fed started to cut interest rates and the quantitative easing. So this is a good overall play that I'm going to show you utilizing options how I'm going to play it. But look here, the Motley Fool. This group came out and just Friday they wrote this article as one of the top 5 stock picks, and of course Chevron is one. And let's jump in. I've highlighted a few things here. Chevron and its growing dividend are built to last. So basically crude oil prices they're down to $70 per barrel, so they're very low right now. It's the lowest level since 2024. The sell-off is dragging down the energy sector, including big names like Chevron, which now is less than 9% away from its 52-week low. So it's moved down quite a bit. And they did acquire Hess Corporation, a huge, oil and gas company as well. It's an exploration and production company. And this has not really been moving forward. It's been kind of slow, but on September 30th, Chevron got good news. The FTC concluded that it could proceed, so that's good. And this will give Chevron even a better global diversification. They're already one of the most well-diversified oil and gas companies right now, but this is going to provide further stability. So when oil prices are at lows, they cover and they still make their dividend payments because they've got an excellent balance sheet with very little debt, and that's due to their size. Chevron's paid and raised its dividend for 37 consecutive years, meaning it's raised even during years when growth has slowed. So what's nice about that is if we do enter a recession, right now I think odds are we're going to have a soft landing. We possibly won't, but if we do, hey, more money is going to pour into this. And at some point before the election, there's going to be some volatility. The market will likely have a pullback, but we'll see. But Chevron's going to continue to do well. In the following chart, you can see their long-term net debt declined and how it declined versus their cash from operations here in orange. So as their cash from operations was up, they continued to pay down their debt. So they take advantage of the cash flow and pay down their debt, and that gives them a strong company. 3 top energy stocks to buy in October. So similar article talks about their, so Devon is one as well you might want to look at, but it still talks about being integrated, operating in the pipelines, the chemicals, the refining, and again, energy prices are the still the driving force behind their performance, but they'll do well in any environment. Their debt to equity ratio is the lowest among its peers at 0.15 times. So if you follow this channel, follow me. I've been trading Exxon as well, and I'm long Exxon right now. Actually been trading iron condors in a range, but now oil is getting ready to take. It has taken off, and it's going to continue, I believe. That gives the leeway to add leverage during energy downturns. Again, 37 years, 4.3% dividend, incredible. And then the last one I'm going to show you here, where will Chevron be in 10 years? Talks about what they do and the way that they also provide chemicals. And then it talks about the clean energy threat to Chevron's business. So some people, are concerned about that. It's worth watching, but again, not over the next 10 years. So this talks about, things that, 200 years ago, biomass, so burning wood was the primary source of energy. It's still widely used today. Coal is still widely used today, even though it's been overtaken by the oil and natural gas industry since the mid 1900s. So given that track record, they're saying oil is still going to be around a long time, oil and gas. And OPEC and the International Energy Agency, they all predict oil and natural gas will remain vital in the world through 2045 to 2050. So I'm not at all concerned about the oil and gas industry going away. Chevron's helping the world grow. So we know China and India, the population's expanding, but their energy consumption or use has increased 357% between 1990 and 2021, and India's use increased 158%. So more energy means better lives, and even for the world's poorest populations. So as China and India grow and expand, they're going to continually use more renewable power while also relying on oil and natural gas. So they're going to have solid performance moving forward for a long time. So let's jump into it, and I will show you exactly how I am trading Chevron right now. So if we jump in, this is the Tastytrade platform. I use Tastytrade and Moomoo. I've got links down below, so check those out, and there's some free offers. I look to trade options at around 45 days, 30 to 45 days to expiration. So if we go on the trade page right here on the Tastytrade platform, we punch in CVX right here, and we can look at the chart right here, CVX. So this is the 1 year, 1 day, and I've got the Bollinger Bands are in white, and then I've got the 200-day moving average in yellow. So we're below that, but look, we've just ticked up. We're at 150. And so just below that 200-day moving average, and look at this move that we've just had up. And here the green is the 13-day, and the red is the 50-day moving average. And we're just, this is totally bullish, and this is kind of a flag pattern, but we're getting ready to break out, I believe. So I like to look at the charts as well. So CVX trade page, 40 days to expiration. So let's click and open up this option chain, and this is the November 15th. And today is, this video's coming out. Well, I'm doing it on Sunday, 10/6, but 10/7 is the date I've got on the video. So November 15th puts us at 40 days to expiration. Now the puts are on the right, the calls are on the left, and we're at 150. I'm going to click on the 150 and the bid to sell the 150 put, and then the buy, the 140 to buy the 140 strike. And we're going to collect $3.08 for placing this trade. You know what, just to make it clean, well, actually, I'll leave it there. So $3.08. So if we look at that, you look over here, the max loss is $6.92. So that is the $10 width of the strike, 150 minus 140, because 140 is our protection. That's when we buy it back. So if it drops down, here's our profit range, the green right here. and up. So as long as it moves up, we keep what we collected up front, and that's $3.08 per share. One option contract controls 100 shares of stock, so that's really $308 that's going to be deposited in our account as soon as we hit review and send. We'll receive $308, and we keep that all the way for the next 40 days unless it drops below this price right here, and that's our break even. And I'll show you that on the curve mode here in a second, but well, maybe not a second, but a minute. So we've got the 150, 140, and this is called a put credit spread because we're collecting this money. If we were to do it the other way, we would be paying a debit, and that would be a debit spread. But we're going to do a put credit spread. I always like to sell options in order to collect that premium and keep the odds in our favor. If we look here, 60% probability of profit. Now we can also, if you look here, if we wanted to even be safer, we could go 145, 135, but we only collect $187, but our probability of profit goes up to 70%. So you can see that's how options work. It's all about probability of profit and what you think the market's going to do. So again, I'm going to be aggressive and go for that $300 because I think oil is going to go up. So that's what I'm doing. And now if we go on curve mode right here, and we've got the analysis tab checked as well. Now you can see here our profit range. We're trading at 150. So here's this little flag is where we're trading today. We actually, you can see that it can even move down the stock price over the next 40 days and we're still profitable. Right here at 148, we make $108. So even if it drops to 148, but anything above this 150 strike, we keep 308. So our break even is basically the $10 width minus 308. Our max loss is $692. If it were to drop down here, say it drops to 120, we lose $692. But you know, hey, we're not planning on that happening, right? But if it does, and we test this strike at maybe 10 days to expiration, 10 to 15, I'll just roll out from November to December and collect more premium. So that's kind of how it works. But you can see right here the profit range. You hit review and send, collect the money, and we move on. So let me know if you have any questions on this, and if you use Tastytrade platform, let me know what platform you're using and why you're using it, why you like it, and let me know if you're using Moomoo or Tastytrade as well. Hit review and send and place the trade. All right, guys, if you're a beginner and this sounded a little confusing, don't worry. It did for me as well at first. We'll continue to cover different details on options trading in future videos. Remember to hit that like and subscribe button down below. Download the free options workshop. Join Moomoo. Check out the link for Tastytrade as well. And leave a comment. Let me know, what are you trading today? Have a great day. Thanks for watching. I'll see you in the next one.